Market Chameleons and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance.
All righty.
There's a disclaimer. I'm going to share my screen. If you guys are joining us for the first time and you have any questions, please put those questions in the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question direct, we also provide a link to Zoom. Click on that link. It takes you over to Zoom. Once you get to Zoom, click on a button, raise your hand. It'll prompt you to turn on your video camera. You don't have to turn on your video camera, but once we let you in, everybody could hear you and you could ask your question directly. While we're waiting for questions to queue up, I'll start out taking a look at the pre-market report, see what stocks are trading in pre-market hours, and maybe I'll continue on a couple of reports we haven't hit on in a while. I'll take a look at the historical gaps in the most recent history in the last 30 days or 20 days, and we'll see what tended to happen to stocks after the opening if they gapped up, or what tended to happen to stocks that gapped down at the open. All right.
Perfect.
So let's take a look at pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, I see 37 stocks made our percentage gainers list, 81 on the percentage decliners. From this perspective, it will look like we're set up for more bearish bias at the open. I'm going to filter this list down to just S&P 500 stocks to get a sense of what's going on there. So to do that, I'm going to use the filters here in ETF, drop it down, and I got a list of ETFs to select from. When you select one of these ETFs, the list below will get filtered by stocks that are holdings in that ETF. So the first one, SPY, S&P 500 ETF, let's select that. When you do that, the list below will get filtered by the stocks that are holdings in SPY, which are the S&P 500 constituents. And here we see two stocks made our percentage gainers list, 12 on the decliners. From this perspective, again, we're looking like we're set up for bearish bias at the open. The only one sticks out, Disney, up 10%. I believe that now they're going to start changing their CEO, going back to previous CEO, trying to change things around there, but up 10% on that news in the pre-market.
I think there's also an activist who's come in, right, from Peltzer.
They're trying to change because what Disney's down, I don't know,
40% or something.
40%. They're trying to.
Which, I mean, in fairness, the whole market's still down, right?
The whole market is down. Technology stocks are down. Stocks even in the streaming business.
I mean, the one thing is they invested a lot of money in the streaming business, right? When a lot of businesses were going after that, high, right. It's capital intensive business, right? And it's a high mark, right, but it's very expensive to get started, and the high flyers were all in it. So
yeah, Disney was in a good position probably to compete in that streaming business because they already had the content, and they have Hulu. I think Hulu's still not making profits, I believe, or it's not profitable like Netflix. At least if you take a look at Netflix, they are a profitable company. They generate, cash flow. And if you listen to their earnings releases, I think that they're saying their competitors are having a hard time turning a profit in that streaming business. But you're right, it's competitive. And I believe Disney actually has content on Netflix, right? So Netflix pays Disney for content.
Yeah, there's lots of Disney content out there, and I'm sure long-term contracts they had with Netflix. So I'm sure some still have.
Yeah. Let's take a look at a report. I'm gonna slide down here. We haven't looked at this in a while. Since we're in a pre-market and we're looking for stocks that are potentially moving right at the open, right? The pre-market, we're talking about it. That's kind of like your first look what traders are doing. Then you have your opening auction, which is like a single priced auction. Then you got regular trading. And when we look at the pre-market, it's kind of an indication what the stocks are doing. And maybe that's where they're gonna, open close to there. Once they open, right, you got the opening auction, and this would be the gap. And here we have in the last, 20 days. So this is 1 month, a whole month's worth of trading. And you got the opening gap, which then, what is the opening gap? Opening gap is that auction price, single price auction by the specialist after he matches up his buys and sell orders. Sometimes he participates on a side when there's an imbalance, and he'll open the price higher or lower from the previous day. And then in that opening auction, you have people who are participating that couldn't really access the markets in the pre-market. Okay, so there are institutions like mutual funds and traders that are not allowed to participate in the pre-market, or they don't. And that first look when they do is that opening auction. After that, then all the quotes are firm. We go to the regular hours, and all those other rules kick in the regular hours that don't exist in the pre-market. And this here captures that opening price at the opening auction. Okay. Once it opens up or down. You have regular trading kicking in. What does the stock tend to do, after that opening auction? So if it opens up maybe on high volume, and then does it continue to go up? Does it go back down? Does it build on that strength? What does it usually do? That's what this report is trying to answer. And here it's divided into two reports. One is the stocks that gapped up. And then if you tab on here, these are the stocks that gapped down in the last 20 days. Let's focus first on the gap up ones. And after they open, here we'll take Qualcomm. This is from November 18th. After the stock opens, right here, it opened up 1%. Then we track it from that opening price. Okay, so that would be our new reference price. Opening price, there's a auction price set by the specialist. What happens afterwards? Okay, if the stock opens higher. And here we track the first half hour and then the entire day's trading. And we track the first half hour because usually you get a lot of volume right at the beginning, right? The volume in the start of the day tends to be much higher than the middle of the day, and then it picks up at the end of the day. But you get a lot of volume in that first half hour or even hour. So what does the stock do by 10 a.m. when all those orders start flooding the exchanges? You got VWAP orders, market orders, people rehedging. What tends to happen? And that's over here. This here, that percent change is from the opening price. So from 124.12, what happened the next half hour? You see that the stock fell back, opened up, fell back down. What about to the end of the day? What if we just gave it all the way to the end of the day to build up on that strength? Let all the VWAPs get filled. Let all those orders get exhausted. What happens by the end of the day? And here we see that in this situation, it was still lower from that opening price. So it didn't build on strength. It was an opportunity to actually sell stock in this situation. But that's one day in Qualcomm. What we want to do is just take a look at a group of stocks, what tends to happen. And this here, right, this are statistics for all the stocks in the last 20 days. So 7,531. You can see if we took all those stocks that gapped up by 10 a.m., 46% of those stocks were higher, 53% lower. On average, it was a break even. But you could see that most of the time they tended to weaken after the open. By the end of the day, 47% of them were higher from the opening price, 52% lower. But on average, they did gain a little bit, which just telling you that the stocks that went up by a higher magnitude than the stocks that went down. But let's narrow this list down to S&P 500 stocks and compare them to that control group. Okay, to compare that to all the stocks. I'm going to drop this in ETF and select SPY, which are the S&P 500 stocks. And now we have stats on the S&P 500 stocks versus all the stocks. And here we could see that for S&P 500 stocks that gapped higher at the opening, 45% of those were higher by 10 a.m. versus 54% lower, which is giving me that they actually did worse than the control group. Okay. By the end of the day, 47% higher, 52% lower for an average gain of 0.1. So sometimes these will not add up exactly 100% because some of them will be unchanged. That's pretty much in line with everybody else. What about filtering this down even more to the ones with higher market caps? S&P 500 stocks, let's do over 100 billion. Now we should be seeing a lot more familiar names: Qualcomm, JP Morgan, Oracle, UNH, UPS, Visa. What happened to those stocks? Here we could see by 10 a.m. still bigger percentage of them were lower than higher for an average loss of 0.1. And by the end of the day, again, a bigger percentage of them declined from the opening price for an average loss of 0.1. So here that in this study that we did, in this sampling, the takeaway is that those stocks, even though they gapped up in the morning, that wasn't a kind of indicator of more strength to come. On balance, the majority of them went back down. And if you bought at that opening price, if you bought exactly the same notional amount at the opening, let's say every time $1,000 worth of stock, if you did that over the course of a month, on average, you were a loser of negative 0.1% per trade. Okay, so you lost 0.1% per trade on average if you try to get in on the opening price when the stock gapped higher in the morning. We could also narrow this down even more, and let's say, what about if it gapped up by a bigger percentage, showing more strength than just 1%, 1.3. Let's say it gapped up more than 5%. Was that an indication that there's going to be more strength to come? I'm going to click on this and we're going to take a look at what happened there. So gap up more than 5%, and I'm keeping all these filters the same. So far, still, we're looking at S&P 500 stocks with a market cap over 100 billion. And in addition, they gapped up more than 5% in the morning. All right. Then we see a different picture. There are 29 observations that met those conditions. Over here, AMD, let's just take a look at some of them. AMD on November 15th, here's the gap in the morning, up 5.1%. Okay, so big gap in the morning, opened at $77.30, up more than 5% from the previous day's close. There was some news on it. You could hover over and take a look at it. By 10 a.m., it was up another 1.3%. Okay. However, at the close, in this situation at the close, it did come back down. And if we use the opening price as a reference, it was down 1.2%. So that's in AMD. But what about the rest of them? So that's in one instance. What about statistically as a group? You could see here that, there were 29 instances of these conditions being met. And this is what happened. By 10 a.m., 83% of those stocks were higher from the opening price. So even though they got the 5% or more, if you participated at that opening price, by 10 a.m., 83% of those stocks were higher for an average gain of 0.9%. What about holding them all the way to the close? So you participate at that opening gap. What happened by the end of the day? Well, 83% of them remained higher. So same percentage of stocks remain higher, but by the end of the day, it looks like they actually expanded on the stock increases, right? So the stocks tended to go up even more towards the end of the day, on average gain 2.2%. All right. Let's take a look at a different scenario. I'm going to remove the 5% for now. So let's forget about the 5%. Go back to S&P 500 stocks over $100 billion in market cap. And let's see if opening at a 52-week high made a difference. Because if it opens at a 52-week high, we know that that's gonna make the news, right? That's gonna hit a lot of people's indicators, their signals. Like what do people do? How do they react if a stock opens at a new 52-week high in the S&P 500? These big market cap stocks, right? That's what we're seeing, and I'm not sure if any of them did, because the market is down a lot. So I'm not sure if that even happened yet. But let's take a look if any of them even hit a 52-week high in the morning. So let's take that. I'm going to click on here, 52-week high. And that did happen. Let's see, 11 times. So there were 11 instances in the last month that a stock was in the S&P 500 over 100 billion over 100 billion market cap. It opened higher, and that print made a new 52-week high. Here's an example here. McDonald's on November 10th, it opened up 1.3%, which it opened at 281.49. That's up 1.3%, and that would have made a new 52-week high. We could see what happened afterwards. In this McDonald's case, the first half hour, stock weakened pretty significant. It looks like down almost 2%, down 1.9% from the opening price. And by the end of the day, it was down 2% from that opening price. Okay. Now let's take a look at the entire group stats. So opening at a 52-week high, we see 55% of those stocks continue to climb from the open, 45% were lower, average gain 0.2%. By the end of the day, more of them declined than went up. So 55% of them declined from the opening price versus 45% up. But on average, if you did all of those same notional, $1,000 worth of stock at the open, even though you lost more often than you won, it looks like the ones that gained, the magnitude of the gains were higher for average gain of 0.6%. This one is a little bit tougher to say. It's not, it's, statistically, those that were up 5% did better under those conditions than just the ones that open at 52-week high. But these are the stats that you can start comparing. All right, and that's how what we're looking at is the distribution of returns given certain circumstances. All right. Any questions, Will?
Nope, it's good.
All right. Let's take a look at the gap down then and see what happened to those stocks. So gap down, I'm going to remove these first. Oh, well, I'll leave these.
Actually, Rob popped in with a couple questions.
Okay.
He says, do we have a filter that immediately pulls out all stocks for the day that had an opening gap of 5% or more? Is there some way to look for the stocks under about a percentage move?
Let me take a look. There might be in the stock screener. So I'm on a stock screener right now, and let me see. So I think this is percent open jump. So this is the opening gap right here. If you did above 5%, these would be let me see if I could find so here's the technical. You'd have to go into the stock screener under the tab technical and go to this tab for filters, price, volume, and technical. Here we say percent open jump. So this would be the opening gap, up 5%. And here you could see all the stocks that we're not open yet. So this is from Friday's close. Okay. So these aren't today's. This is Friday's data from Friday. So these are stocks that gapped up Friday morning. This is the percent over here of the opening gap. Okay. Next to it, you actually see how the stock did from the open. Okay. So you could see which ones continued higher. Like, for example, APLS opened up 11.6% and then continued higher, another 4.6%. All right. So you could do it from the stock screen.
All right. Perfect.
Yep. Let's take a look. What was I on? Pre-market. All right. Let's come back down here and look. Let's look at the stocks that gap down. I'm going to click on here. These are stocks that gap down in the last 20 days. What happened there? 44% of them moved higher from the opening price, 55% lower for an average loss of 0.1%. By the end of the day, it was kind of break even. More of them did increase than decrease, but on average, break even. So let's take a look at the S&P 500 stocks again. So I'm going to pick SPY. Now we have the stats for all the SPY, and I'm going to narrow this down. There are over 1,000. Let's narrow it down to the highest market cap, 100 billion. And these initial results show us that first half hour kind of break even, almost 50-50. No, on average it was a break even. By the end of the day, it looks like 58% of them were higher, 42% lower, for an average gain of 0.3. Then in this case, it looks like for the higher market cap stocks that gap lower, on average, traders tended to scoop them up or bottom, more often than not, they would use that as a buying opportunity. Okay, that's how I'm seeing the data right now. But let's filter this down even more. What about those stocks that gap down more than 5%? Okay, the bigger gap. And this will be down more than 5%. All right, here we see that by 10 a.m., 67% of them were higher, 33% lower, average gain of 0.3. That shows that the bigger gaps on the higher market cap stocks in the S&P 500, traders started to use that as a buying opportunity in the morning, push those prices a little bit higher after the opening. By the end of the day, actually, more of those stocks declined further from the open than higher, but on average, still we saw positive returns, meaning that those that climbed from the open, the magnitude of the moves up exceeded on average the magnitude of the ones that decline. Okay. Last one, I'll let you guys go. It's almost 9:30. I'm going to release this one, more than 5%. And let's look at the stocks that gap down and hit a 52-week low. Okay. So if the stock is an S&P 500 high market cap, hits a new 52-week low at the open, is it time to buy? Was it time to buy or not? That's the question we're trying to answer. So let's click on this. Open, 52-week low over here. Okay. So first half hour, it was 50-50, break even. Here we see there are only 4 instances, by the way, not a lot. Only 4 instances here, but it looks like by the end of the day, 3/4 of them were lower. All right, only 1/4 was higher. And we could see here, this is where the data is. So Tesla, Qualcomm, Amazon, and Meta, it all happened there. The ones that were lower, we could see they were not lower by that much. Tesla was down, hit a 52-week low, declined by the end of the day an extra 1.4% from the opening price. Qualcomm declined another 0.5%. Meta almost break even, declined 0.1%. But the one that went up, Amazon, was up 5.5%, which you could see here that one that went up actually pulled the entire average higher. In other words, the ones that did go down after opening at a 52-week low, it doesn't look like they so far went down a lot after that, but the ones that were able to rally, which was one instance there, rallied by decent amount, right? 5.5%. All right, 9:30, everyone, I'm gonna let you go. Have a great trading day. Stay safe out there. Hope to see you guys tomorrow.
Great job, D. Just a reminder, everyone, I mentioned last week, but I go away on Tuesday. So tomorrow will be our last show of the week. And just Thanksgiving week and taking the family down to Disney. So great job, Dima.
All right. Thanks, Will. Thanks, everyone. Stay safe, and we'll see you guys tomorrow.
All right.